Welcome to Live Wire Markets. My name is Vishal Tekchandani. Thank you for tuning into the Listed series. Today I'm joined by none other than Catriona Burns from WAM Global, and we are going to discuss the opportunity in global, small, and mid-sized companies. Catriona, it's been a New York minute since we last met. How are you?
Very well, thank you. Thanks for
That's
having me.
good. Of course. Now, Catriona, we've seen interest rates drop over the last year. How's that changing the outlook for global equities? And from an investor's perspective, is now the time to ramp up allocations?
Well, particularly given the volatility we're seeing right now, I think there is always a time for global equities in a portfolio in terms of diversification. And I think, look, even when we launched the fund 7 years ago, the point was our shareholders didn't have diversification. Many of them had huge exposure to Aussie stocks and Aussie dollars. So there was definitely an argument to have global equities in their portfolios. I think particularly at the moment, we're seeing lots of stocks selling off. So even great companies, you're getting at better prices. So we think it's an absolutely great time to be allocating to global equities.
We've got global equities as one big basket, and underneath the layer of mega caps, you've got this wonderful world of GSMIDs, global, small, and mid caps. Talk to us about the opportunity there, particularly as monetary conditions ease.
Typically, as interest rates at the long end come down, that bodes well for small and mid-cap companies. Over the recent years, we have seen performance from the market come largely from those Mag 7 stocks. So it's been a very concentrated market. So we think right now, in terms of interest rates coming down, the fact that the concentration of markets is so high right now, really it does pay to go hunting below that big end of the market.
Okay, and can you explain why that is? What is it about a global small and mid-cap company that makes it perform better? Is it lower debt payments, for example?
It really is very stock specific. And look, we're happy to hunt anywhere around the world, but the bifurcation and the discounts for global small and mid-caps right now really does make it even more compelling than it might have even been a few years ago. So for us, it's all about looking at the individual company. And yes, it may be compelling, because it does have low levels of debt. It might be compelling because it's very early in its growth story, and so have a huge penetration opportunity in terms of the market it's going after. So for us, it isn't per se that it is a small and mid cap. It's what are the individual characteristics of that business, and what is its balance sheet like? What is the growth opportunity for that company? What is the management team doing that we think will mean that they execute well over time?
Okay, and I'm hoping you can dive into that more. So what are 2 to 3 things you look for in a global small and mid cap? How is it different to a large cap? And is it specific things like you're looking for a certain valuation multiple, a 20% plus growth rate? What is you looking for?
Yeah, so for us, our investment process really centres on certain characteristics that we do look for, which is a industry position. That means it's a market leading one or has the opportunity to capture to be the number one player. We look for the quality of the management team and overlay that with how much stock do they own, what is our alignment to that management team, what is the earnings growth potential of the business and how sustainable is that over time and what growth rate will that be, and then overlay that comparing it to the valuation, and then try to identify a catalyst to drive the share price.
Can you talk me through 2 to 3 opportunities you love right now within your portfolio? Just a couple of bullet points on why you like each one of these.
Sure. So a few names we like. Hemnet, which is the REA equivalent in Sweden, much earlier days than REA in terms of monetizing the opportunity they have in their market. So we think they can triple their revenue over the next few years as they do monetize that. And we think that the management team will be able to do that and capture that opportunity. And they have the playbook when they look at REA, when they look at what other Scout24, when they look at the other players around the world in terms of capturing that opportunity. So that's one.
Another one you like is CTS Eventum. You've told me about the stock for a number of years now. People prioritizing life experiences. Why do you like that one?
Absolutely. So, we've owned this one since COVID. We had owned it before, sold it on valuation grounds, and then bought back in during COVID. And in terms of our process, it's been phenomenal because it's continued to have catalysts. It's continued to beat earnings. We've seen artists come out of COVID, tour the world, and they've capitalized on that. And now they're going into the US. So we think that's a really exciting revenue opportunity for them. And it's founder-led with huge alignment with the founder having 38.8% of the stock. So that's one we continue to like and have done for a number of years. And then another one would be TradeWeb. So they are electronifying fixed income markets. So equity markets have been electronified, 90% plus electronified for many years. This company, the fixed income markets, are very much voice-driven markets in a lot of cases, depending on the security. And so we think it's like how we love exchanges like CME and ICE. The TradeWeb are doing this in fixed income markets. So we think, these are very high incremental margin businesses, and it's decades behind the equity markets. So we like that. And then another one would be WAM Global, which is an auction marketplace for secondhand equipment. So very much, again, these businesses don't have huge capital intensity and high incremental margins.
Okay, really interesting set of businesses there. Now, risk is a key consideration, especially when you're investing at the smaller end of the investment universe. So how do you manage that risk, both from some of these companies potentially having weaker balance sheets and from a position sizing perspective?
For us, it doesn't matter if you're small, mid, or large in size. You're assessing those characteristics of balance sheet, earnings growth potential, et cetera, regardless of size. And so absolutely, there are some smaller balance sheets per se because they're smaller companies, but they might have net cash balance sheets, which mean that they're not exposed to risk from having high levels of debt if revenue and earnings come under pressure. So for us, it's a very much bottom-up, assess the company, what is the quality of its balance sheet, does it have low levels of debt, and then those characteristics that we look for in terms of the quality of the management team, the earnings growth potential, and the industry position. So it's not necessarily whether it is large or small, it's just what is the quality of the balance sheet and the sustainability of the earnings growth.
Okay, now I gotta ask,
Yeah.
You're a global equity manager. Is Donald Trump making your job harder?
It's not unexpected what he's doing. So I think we all lived it last through the 2016, Trump administration. I think that was to be expected, that there was going to be volatility, and that's why, we do own businesses like the exchanges because they benefit from volatility, and why we positioned away from companies that we thought would be at risk from tariffs, because you kind of know his playbook. Sure, you don't know what deal he's going to strike and then reverse or whatever, but you do know that there's going to be volatility and noise. So for us, it was trying to get positioned in a way that wouldn't, that could take advantage of the volatility rather than be negatively affected.
Avoiding the tariff traps then.
Exactly.
All right, Catriona, thank you so much for your time.
Thank you.
I hope you enjoyed this interview. Please don't forget to visit livewiremarkets.com, where you can find all our listed series content. Do give this video a like, subscribe to our channel so we can produce more content like this. My name is Vishal Tekshidani. Happy investing.